Welcome to Guardian Capital's market outlook discussion for the month of August 2025. The agenda will be discussing four things. First, education, the thinking framework. Second, earnings. How has the earnings for the BSE 500 companies been for the current quarter? And three, valuation and expectations. In this, we'll be discussing how the market is currently being valued and what's the outlook going forward. And fourth, the sectorial view. Principle 1. Earnings growth determines 80% of returns. If you closely look at the table, we would like you to focus on the red circles where for the past 3 decades BSE Sensex price has grown at a CAGR of 11%, whereas the earnings have grown at a CAGR of 10%. So therefore, we can strongly conclude that there's a high correlation between price growth and earnings growth. Principle 2. Revaluation growth determines 20% of returns. If you look at the example below, Asian Paints over a period of 11 years have delivered a CAGR return of around 13%, of which 80% have come from earnings growth and around 20%, which is 3%, have come from the revaluation growth. What's revaluation growth? In 2014, people were willing to pay 43 times for every 1 rupee earning earned by the company, whereas in 2025, the same people were willing to pay 61 times for every 1 rupee earning earned by the company. This is the revaluation growth. In this slide, we would like to highlight the importance of extra return generated. Let's just say you invested 1 crore lump sum at a rate of 11% for 30 years, you would end up with a corpus of 23 crore. However, if you earn 1% extra return, your corpus amount would increase by around 7 crore to 30 crore. And if you generate an additional alpha of 3%, which is around 14%, you would end up with a corpus of 51 crores, which is 122% more than what you would have earned if you invested at the rate of 11%. So this signifies the importance of staying invested for longer periods of time. Now moving on to the second aspect of agenda, the earnings slide. It is clearly visible that the revenue growth across market caps has been lower than its historical averages for the latest quarter, March 2025. If you look at BSE 500 revenue growth was at 4% as against its historical average of around 9%. For large caps, it was at 6% as against 9%. In mid caps, it was around 5% as against its historical average of around 9%. And in small caps, there's been a revenue decline of about 3% as against its historical average of around 8%. However, there's been a significant improvement in PAT, primarily attributable to margin expansion resulted from lower debt levels. Third, valuations and expectations. Historically, companies have grown by around 11%. However, the growth in the recent quarters have been slowing down and currently they are growing at a rate of 7%. And if you look at valuations currently, post corrections, there's been a sharp recovery in the market, and currently valuations across segments look expensive, with BSE 500 overvalued by about 11%, large caps and mid caps by about 13 and 18%, and small cap and banking and finance by about 14% each. And the overall outlook going forward, with valuations currently on the higher side, coupled with earnings growth slowing down, it would be ideal at this time to wait and watch. And the last aspect of the agenda, sectorial view. Here, if you see currently, about 78% of the economy is fairly valued and about 22% of the economy is overvalued on valuations front. On revenue growth front, about 46% of the economy is growing faster than its historical growth rates, and about 54% of the economy is growing slower than its historical growth rates. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.